You use a hedging strategy to more or less cover your risk on an index market, you'll have an easier time than using a stop loss in many cases. And that's because you do get times where you have so much ebb and flow, so much up and down, that you can be stimulating gains constantly, rather than getting stopped out, missing an opportunity, and then having price go your way and therefore ending in gains. That's the problem really with stop losses. They have to be very accurately placed. So I'm going to show you how to use our hedging strategy on the Nikkei, Japanese stock index. Don't forget, if you want to learn how to do this for income, as many of our pro multi-asset day traders now do, just go underneath this video. There's also a free Discord there too. Let's get on with it. So I know a lot of people trade the JPN225, the Nikkei index. So we're just going to create a project on this on FX Tester Online, so I can show you how to manage your risk on this particular asset. As always, we end every cycle in net gains. If you want to learn how to do that and trade a little bit differently to everyone else, then just go underneath this video. There is a free Discord there and also a link to join us. So if I load up some data here, you can see up to 2014, we've got a little bit into 2013, a general high rise, really, I would say, on the back of the financial crisis, or the global financial crisis. So it's bringing us to a point where we've had a good rally, and now you can see there's a little bit of a correction happening, and we popped up again. And now what's going on is, a little bit of resistance and a little bit of kickback, and potentially continuation of this downside movement. So for that reason, I can look to take a short. Again, we'll stick to the easiest way for everyone to understand risk, okay? And in fact, I think what we will do actually is make it even more simple. So 0.3 is going to be a minimal size, 0.6 medium, and a 1 standard is going to be full. Just remember, it doesn't really matter what size as an equity I've got here, okay, because it's a simulation, but your profits or any profits taken are obviously scalable based on the size you've got in play at any time. But if I just keep a simple system of 3 sizes that are easy to understand, lots of people can get what I'm saying quite easily, okay, which is ideal. So you can see a bit of rejection there. I can enter another one. Okay, and I've got a drop there. And also that drop has taken me to my former level here. Okay, so numbers are obviously high. All right, so I'll take that out, and I'm going to go for a lower than previous size of 0.2. So I'm long now, and you can see we're falling. I can add another one at this support. Okay, and any drip lower, I can add another one. And at this point, I would probably want to give a good amount of space until the next entry. But we've rallied nonetheless, so I can kill that. And I can also take that out. And what I'm going to do now is just hedge that former entry. Okay, so basically what I've done there is I'm counting on the potential that we may fall to the downside. All right. Within this downtrend, you can see we've got these lower highs coming in, and I've obviously got my former long here. But if this momentum stops, this big green candle stops, then of course I want some sort of cover on that, which is why I've hedged short. Okay, so in a risk averse format where you're trying to protect fairly early, that's always going to be ideal. To hedge where possible, even if it's early on, because you can see now the pressure is continuing on this index, and we're still coming down to the south side a bit. Okay, so we've now got a further drop. Okay, a bit of rejection, so I'll kill this off. Okay, so instead of being down 14,000, effectively I'm down 6, okay, which is a net of 8, and that's because I hedged. So if I take another 0.2, as we're seeing a bit of supportive price action here, I can take a minor gain there. And then because there's hardly any retracement, I'll take a tiny short as a hedge on that former long. Of course, if the price rallies now, you know, it's quite ideal because the hedge was only small. But nonetheless, I can take that. So I'm accumulating a lot of hedge gains to the south side, okay? And I'm also getting some what we would call DCA gains to the upside. So they're later entries based on the former long side I took. So although the market is trending down, I'm not really growing a drawdown here, and I'm still in net gains, okay? That's really important to understand. So I'm going to take another 0.1 because you can see we're now getting a bit of price momentum to the upside. And it could be the case that I can exit my long for gains. And again, you can now see that I'm hedging these former shorts. All right. So again, the loss here that's growing is not a true loss because this is going to pay me. So I can kill that off and I can have a look where I want to short. Well, to be honest, now looks fairly decent. So I'll take another light entry because of the momentum of price. And you can see that you're getting a bit of sustained price action to the upside. So for that reason, I'm going to take a hedge long. So I've got 1/3 of my exposure hedged now. You can see a bit of a pop up there. I think anything back towards the highs. Okay, you can see a bit of momentum into those highs, but I'm going to close that. So minor hedge gains there. Still got my 3 0.1s in play. Can add another one as price pops, and we're still just in positive gains, okay, on the equity basis. It may change, but again, you know, it's not a big issue. I am going to hedge just one here in case we pop, because we've had a minor dip, and I can still close that one out for gains and add another long here. So I've got a fairly even exposure now to the long and short side. I can take another gain there. I can add another short again. So I've got 4 now with one hedge long at the top to protect. Okay. We're going to need a further fall for profit taking. So we've got gains there. Take another long there. Okay. So I'm just taking light sizes here to keep risk safe. Small hedge gain there I can take. And you can now see a push again to the upside. So again, I can add my short I had before. And now we're picking up decent gains. So I can kill this off, take another hedge long. Okay, so again, the exposure, you can see 3 red to 2 blue. It's probably the easiest way of understanding it in simple terms. But again, you can see gains there. So I've accumulated a good lot of profit at the moment, and the market is being sustained to the upside. So I can spend some of that and do what we call washing, which is where we spend our hedge gains to remove. So all the hedge gains, or well, some of the hedge gains I took have just paid for the removal of the loss instead of using a stop loss. Okay, so that's really key. And now I can reshort at the top, and there's a good chance I may start to see some of the gains I just lost. Well, I technically didn't lose because they were hedge gains. They may come back in the form of new gains on the later entry. Okay, so I can now take another hedge long here. And because the market is gaining momentum, I could choose to spend another bit on this. Okay, so I've now tightened up the cycle. My PL is in net gains, and I'm much more comfortable. I've only got 2 shorts now because I've washed them away, and I've got 1 long left, just sitting there for potential rallies back to highs. We didn't get that, so I can kill off that one. I can add long here because we're getting some sort of an uptrend. Okay, we're falling again. I can consider whether I want to add again. I've only got 2 longs in play. I think I will hold it and just add another short. Okay. Did that go in? No. Okay, so I've got another 0.1 there. And on any larger fall, I can escape that. We're not getting that, but our hedge longs are coming to gains. Okay, so we kill that off. And then we get a dip and a push. And I can kill that long off. And now again, I'm quite comfortable just having these 2 shorts. My short is there, and also I've got a short a bit lower. Now that is about 400 points off where we are. But I can add a hedge long, okay, in case we push the highs again. and any further drip down, I can look at closing that short. Now we're getting a bit of momentum to the upside, so I can kill that long, add a short there. So I've got 3 shorts in play now, and I've moved the cycle up, if you like, quite well. I've deleted those previous losses and controlled my equity. And doing this on indexes is quite simple when it's well managed based on the price action. So more gains there on the hedge side long. Now we're getting a rally, so again I can take a hedge long in case we continue up, which it looks like we will. So here's where you'll get a bit of drawdown, but because we've taken so many gains in both directions, the equity is looking quite sustainable nonetheless, which is good to see. So yeah, we're pushing a little bit. If you look on the weekly, okay, if we can smooth that out of the way, you can see how we've traded a long cycle now of price action, and we're coming up to a reasonable high. So there's a good chance we may see a drop here. Okay, I've got entries spread out like this. I'd be willing again to add, even if it takes me into a negative equity for a second. Obviously it might not, but so we're coming off the highs. I think I'll just take it off. Do I want to hedge? I could take something very minimal because we're at highs. It's just to take some of the edge off should markets do that, which they are. I think my short is going to be light, firstly into the high, and then I'll add again short on the drop. Okay, so we want a bit of follow through really if we can get it. There we go. So nice entry confirmation allowed me to do that. So I'll kill those 2 off. Okay. I can also take that one out for a tiny loss, and I can add a bit of long exposure. Okay. Just a little bit. And I can add another one. And at this point, because the market's pulled back significantly and I've taken decent hedge gains, I'm going to close that one out for a loss. So we're still net 32,000 up. Big jump up here allows me to kill that one and kill that one for nothing, essentially. And then if I want to take this one out, there you go. Still well in net gains, no problem at all. Okay, so PL is that on that cycle. Obviously, it depends on your equity. If you've got more, if you've got less, you would just scale it as such. But you can see again the swing. I mean, if you looked at the drawdown, I don't think we ever really went over like 1 or 2% on a move of this 1382 to that high. Okay, it's a very long way with that net gains. Okay, so you know it's simple and easy to do once you've got the rules. If you want to learn, like I said, just go underneath. See you in the next.